What does the Russia-Ukraine war and a tightening Federal Reserve have in common? Well, for today's guest, the answer is a total global economic collapse and a new gold-backed currency. British economist Simon Hunt tells us that he expects to see the US Federal Reserve and the dollar become a sideshow, whilst the likes of Russia and China make strong moves against the global reserve currency in favor of a commodity-led, gold-backed currency. Simon is an economist and a commodities expert with nearly 60 years of experience looking at the interconnections and interactions that go on within the political and economic global systems. This is a sobering, thoughtful interview full of insights and predictions. If you're asking how the Russia-Ukraine war or an increase in interest rates will impact your wealth, then stay tuned. The interview with Simon has some commonalities with the David Hunter interview from last week. Be sure to subscribe to Goldcore TV to find out more. And if you're wondering how you too can protect your portfolio with gold and silver, click on the link below to see how Goldcore can get you started. Simon Hunt, welcome to Goldcore TV.
Well, thank you for having me. It's a pleasure.
I'd love to get your take on where you think we are in global financial markets at the moment. The global economy, there's an awful lot going on at the moment, whether it's rampant inflation, whether it's the war in Ukraine, whether it's developments coming out of China. We seem to be on a bit of a knife edge on financial markets with a high degree of anxiety. What's your take on it?
That's a very big and a very important question. What we've got is we have a war in Ukraine, but it's not a war Ukraine versus Russia. It's a war NATO versus Russia and China, which is being played out in Ukraine. That war is very likely to spread to other countries. And it's really all about from the Western Alliance's point of view, that they're running scared, you might say, that China and Russia, through the Eurasian Economic Union, will create a new currency and trading platform that does not need the dollar.
Mm.
And it's a currency which will be based on the weighted average of member currencies, plus the commodities that they produce, but those commodities linked to gold, not to dollars. This will be an attractive alternative to many countries outside the Western Alliance, the SCO countries, the BRIC countries, and you can go as far afield as the Gulf here, Africa and Latin America. Because what you will have is a currency that has value to it, as opposed to a currency which deflates year in, year out. And for instance, a dollar in 1950 is worth precisely 8 cents today.
Mm.
So the Western Alliance sees this coming and wants to defend its hegemony and the domination of the dollar in world payments. The new world has got frustrated, if not angry, with the bullying tactics that America has pursued over the years. You only have to look to see what they've done in the Middle East and Afghanistan and so on and so forth. So this is really what the world is, the war is about. And thus it's unlikely to end in negotiation unless we get a change in the political structure of America. But that's not for the next couple of years, and big question marks about that. So really what we are seeing with a war, which automatically means you can forget about long-term growth. You'll have great volatility. You will have sharp dips in global business. You will have muted recoveries and great volatility in commodity and financial markets. So what we see is that, particularly in America and Europe, further very sharp falls in equity markets between now and probably September. Sharp further declines in commodity markets. And then as the Fed realizes, well, first of all, I should say that they've been persuaded to go hard on inflation, thus hard on reducing QE and raising rates before the midterm elections in October, in order to bring down, so they hope, the cost of living for ordinary households. But as the Fed sees, A, we already have a weakening economy in America and in Europe. And B, by the time we get into August, September, there will be a real risk of recession. So the Fed is going to change policy 180 degrees, cancel QT, come back to QE, come back to flooding the system with liquidity. So what will then happen is that by the end of the year, after a correction in most commodity markets, including probably agricultural prices, that inflation starts resurging again by the end of this year and just accelerates as the rally in the dollar turns into a collapse starting end of this year, early next year. And by the mid-2020s on our work, the dollar index will have effectively been halved in value.
Wow.
There's your real story.
Okay.
So we're going to see inflation across the board, wages, food, energy, probably going higher than what we saw in 1979 and 1981. And that was bad enough. I mean, what did Paul Volcker have to do? Sent the Fed funds rate up to 19%. Well, that's not going to happen here. So it's in that period, if not earlier, that the new currency will unfold. And my guess is that a large part of the world outside the alliance will dip their toes, if not their feet, into the new currency. And I suspect that this will include the Gulf countries. Saudi Arabia has already said that it is prepared to sell some oil for one. That's a prelude for what's going to come. because I think that the Gulf countries, it's my personal opinion, will dip their toes into the new currency. And we know that any trade between Russia and China is being done in rubles and yuan. That trade is going to accelerate because whatever Russia cannot sell to the West will be diverted through China. And probably most, well, there's a capacity limitation, but a lot of it will go into the unreported channels of China. So you won't see it in the statistics. And what will China do? Well, China has a priority of stockpiling anything that they import in substance. So that's agricultural prices, commodities, etc., etc. So what we see as a conclusion to rapidly rising inflation in 2023 and 2024 is that we will have a combination of internal market disruptions in the credit markets, defaults, etc., as the Fed tries to control inflation by raising rates to, probably can't raise them beyond 5 to 6%, but that'll be enough to unwind all the zombie companies that exist today. And I can't remember the number of zombie companies, but it is a high percentage of those that are quoted. So, and I think it is perfectly possible, as well as having an internal collapse in the market, that we could have, hopefully not, but I would not be at all surprised if we don't have an intensification of the war scenario. So what we will then see, either in trends starting in either 2024 or 2025, will be a collapse of financial markets. And that collapse will probably be similar, hopefully not quite so extensive as what we experienced or what people experienced between 1929 and 1932. So following that, you will have a restructured world, a world debt will be effectively washed out. Quite what the Western Alliance will do. Will they reintroduce gold? I don't know. But the new world, based around the SCO and BRICS, will be using the new currency, all of which ultimately is linked to gold.
Okay, there's plenty to get our teeth into there, but just to summarize, really, what we're looking at the moment, particularly if we look at the conflict in Russia, in Ukraine, with Russia, the war between Russia and Ukraine, if we can just park the humanitarian crisis for a moment while we discuss this, you're suggesting that it's a proxy war, and that proxy war is to rebalance what we've had as the global financial dominance of the US over the last number of decades. And on one side, we've got the US dollar hegemony, and on the other side, we have the potential for this new Eurasian commodity-backed currency that is now going to start competing with the dollar. And in essence, it's going to compete against the dollar where the dollar is weak. It's going after all the weaknesses, structural weaknesses of the dollar.
Well, it's basically, it's abandoning the dollar. It's abandoning the dollar by having its own currency, and the currency's composition ignores the dollar by linking commodities to the price of gold. And I saw a fascinating chart done by Alistair MacLeod of Gold Money, in which he laid out the gold price in dollars since 1950 up to March 2022 versus the gold grams per barrel of oil. You have over that 70-odd period, complete flat line. The oil price in gold from 1950 to 2022, basically no change. So what China, Russia, and the others are introducing is a currency with value.
With stability.
And stability. Yeah, absolutely. So from that, you'll get the real cost of money, real proper interest rates, real return on capital, etc., etc. Instead of the inflation-driven world that has existed increasingly since Paul Volcker.
The inflation-driven interest rate differential model of managing currencies or currency volatility and fluctuations.
Yeah.
And this Eurasian commodity-backed currency, is this theoretical, or is there any meat in the bones to this?
No, it's got meat to it. Where are we now? We're in May. In March, the first draft was shown to the Committee of the Eurasian Economic Union. They then said, bring us back the final draft by the end of the month, end of March. And I've just read an interview with a very, very senior person in the Kremlin about this new currency and signaling it's any day now. It may be tomorrow, it may not be in 6 months, may not be for 2 years, but it's ready to be unveiled.
Wow. Okay. And obviously, as you say, this has significant implications for the US dollar.
Massive.
It has the potential to supplant it.
Yeah.
Which obviously does not bode well for the States.
What happens to those countries that have large positions in US treasuries?
Have the US played into the hands of this Eurasian currency by what they've done over the last number of years, being slow to act on inflation, dramatically increasing the national debt, mismanaging fiscal and monetary policy? Basically, has it played into the hands of this currency?
The Europeans have really played into the hands of America.
In what way?
By America creating this tension with Russia and using every tool in their box to get the EU behind America, so that America, almost like the Marshall Plan after 45, comes in and takes over Europe.
Just for the benefit of the viewers, maybe you might give us an idea of one of the tools in the box that they have used that has now put them in this position.
the dollar. All the payments go through America.
So hyper dependency on the
Yeah.
US financial system,
Yeah.
which basically gives Europe little or no flexibility, and has
None
to
at all. You do what you're told.
row in behind the US.
Yeah. And sufficiently weak that they can't say no.
So how does this unfold from here? Can this be avoided? Should it be avoided? Is it a good thing for the world, for financial markets?
The question is, how can a war be avoided? Either by diplomacy, through the UN or a third party. But at the moment, that looks very unlikely because of how stuck Russia and America and the others are in wanting their way. Another possibility is, which I believe there is some truth to it, that very quietly through back channels in Europe, there are some more elderly statesmen who are trying to negotiate a way out. That's a possibility. I wouldn't hold too much hope against it. The third, which I think is a more likely outcome, following the Kremlin knows for sure two things, amongst many others. First, that Russia's flagship in the Baltic was sunk by a NATO operation. And two, that the war is being conducted by the US defense system from Kiev. So there's a possibility, no more than that, a risk, I should say, that Russia will retaliate very forcibly against a third party country, no idea where, who, whatever. But we're told by how, but that is a risk. And that could well be the wake-up call that is needed for saner heads in the West to start thinking seriously, do we want real war or do we want a negotiation that results in the three superpowers agreeing spheres of interest? And I happen to think that actually President Trump, that was what he was after. But when in April 2019, he met with Putin, and essentially they had a love-in, which you could see from the press conference afterwards. But then all the neocons, et cetera, threw up their hands and said, you can't do this. And from that moment onwards, whatever he was doing had to be very quietly through the back channels.
Is this, we're on this trajectory now, and I'm not talking about the war now, but the trajectory that you're suggesting for this rebalancing of the global financial system, is it inevitable? And if it is inevitable, does that not make a lot of what's going on at the moment, whether it's the Federal Reserve trying to get inflation under control, by raising interest rates. The sell-off we've seen in stock markets, short-term volatility like that, totally irrelevant to this much larger and hugely significant development.
Yeah. It's almost the Fed is almost a sideshow.
And it's just there. It's just is it a distraction? Because it's not something that we're hearing in mainstream media at the moment at all. So you're saying at this stage that it's fairly much inevitable, and everything else that we're seeing over here is just noise.
Yeah.
And is it going to come to a stage shortly, do you think, where this is going to go a little bit more mainstream, or when do we start? When do we start to hear? When do we start to hear about this?
I think the important question, everything that I put together from independent sources, is that Russia will very soon win the war in Ukraine. The issue then is, what is the Western alliance going to do? They're not going to fall over.
Mm-hmm.
This is where you are going to, it is then that you are going to see the war being carried over into other countries. Whether it's Bosnia, Serbia, Baltic countries, Poland, Belarus, Moldova. It's almost inevitable.
So you don't see the war being confined to Ukraine. It is going to
no way.
And you think that is more than likely going to be through further Russian aggression?
No, more NATO aggression.
Okay. What's the time frame now for this? You talked about volatility in financial markets and the futility of the Federal Reserve raising rates because effectively they're putting another nail in their own coffin. We'll be killing off quantitative tightening and returning to quantitative easing, possibly before the end of this year. Is that what you feel?
I'd hate to put a timing on how soon the war will break out across other countries. I can put forward an argument, it could be any day now. Or I could put forward an argument, it's not for 6 months.
And if we accelerate, I think, cast our minds forward now to the mid-2020s, heading towards 2030, what does the world look according to you at that stage?
Well, I think, as I said in the introduction, we are probably most likely to have a collapse in global financial markets sometime in that period, 2024 to 2027. And it's in that collapse that debt is going to be washed out. And the new
when you say washed out, what do you mean by that? How is debt washed out?
Well, I think government debt will be washed out. I mean, let's take one scenario that's been painted for me. I'm not saying it's correct, but it's one scenario, that America will issue another dollar for domestic use only, linked to the price of gold. The dollar outside America is just washed out. Hence, I mean, we have this collapse in the US dollar index.
Mm-hmm.
I mean, halving in value. So what is America doing? It's washing out all its external debt. God help you if you're holding treasuries.
Okay, so we're seeing a parallel dollar being issued. There's an old dollar and there's a new dollar.
That is a possibility.
Right. Okay. And that new dollar potentially is gold backed.
Yeah.
Obviously, it has to have something that
Yeah.
that overcomes the weaknesses of the current system.
Absolutely. You've got to link it to value.
And it has to have some potential to compete with this Eurasian commodity-backed currency at the same time, in order to maintain some semblance of structure and financial control and economic control.
Yeah, I must emphasize, I'm not sure that that's going to happen, but it's something that has been explained to me.
That all obviously is incredibly negative for equity markets, incredibly negative for
incredibly
bond markets.
Negative for equity markets up until, say, September, October. But with the Fed reversing policy, you're then going to have the final fling in this inflation environment, where you will see new highs in global equity markets, but they're not sustainable. They won't last more than a year or two. It's the time to cash up.
I had David Hunter on this channel last week, and he is another one that is talking about the potential for this melt up, as he terms it, in global equity markets, for very similar reasons to what you're suggesting there, which is the Federal Reserve being forced to do a 180 U-turn and return to quantitative easing, and potentially quantitative easing like we haven't seen before, fueling this melt up. But again, the theory is that this is not going to last long, and that it is potentially the final nail in the coffin for for US equities, and by extension for global equity markets as well.
And commodity markets.
You see commodity markets as well.
Yes, definitely.
Right.
Now,
suffering from the same melt up,
with the exception of gold.
Right. Okay. So let's just park gold for a second. So the rest of commodity markets, so whether it be energy or agriculture, you see between now and towards the end of the year, without putting any sort of a specific time frame on it, you see that those markets are going to continue to slide. And then when we see this reversal of QT to QE, you're going to see a rally in those.
Correct.
Once we see the subsequent, after we see the melt up in both equities and commodities, once we see a subsequent crash longer term in equity markets, as we see this rebalancing of the global financial system, do you see commodities following the same path?
Yep.
Why is that specifically? Just so I understand it. Just
because where's the demand going to come from?
Okay. And is it
the world will be in depression.
Right. So we're talking about non-precious metals, for example. Okay. And is there and also energy as well? So we're talking natural gas, oil. Agricultural side of things as well. Do you see that? Those. Right. Okay. And is there any underpinning of commodity prices as a result of this commodity-backed Eurasian currency that will evolve?
I think because you're going to keep back, we'll be in depression. Where's the demand going to be?
Okay. Fascinating.
I mean, look what happened to commodity prices in the last recession. And that was probably pretty mild from what we're going to see.
That's a very interesting perspective that you have. It's not unique. As I said, some aspects of it are shared by other guests that we've had on here, but you brought it together very intelligently and presented it very intelligently, which makes it very digestible for me and for
thank you,
and for our audience and for our audience. So I thank you very much for that. If people want to find out a bit more about what it is that you do, where do they find you online?
I have a website. So if you Google Simon Hunt, you'll find the website. And I can't remember actually what the website logo is.
don't worry. What I'll do, Simon, is I'm going to put a link to that in the show notes in the description.
Okay, thank you.
Below this video. But for now, Simon Hunt, thank you very much for joining us on Goldcore TV today.
Thank you for having me, and I enjoyed the chat.
Super. Thanks for watching. If you're looking for more thoughts on the future global reset, why not listen to our interview with David Hunter, recorded just last week? Or if you're now ready to hear about gold and silver's role in the coming months and years, why not take a look at some of our other interviews? From price predictions to supply shortages and affordability, our interviewees have covered it all. Subscribe now to Goldcore TV and never miss another episode again. If what Simon and I discussed today has made you want to learn more about how to protect your portfolio from the coming disruptions to the global economy, then why not visit goldcore.com?